What is happening, everybody? Welcome to another edition of This Week in Crypto. I'm your host alongside Dino here, and together here at Santiment, we'll be going over what's been another amazing, bullish, positive week for cryptocurrency. Regardless of what project you were in or trading or hodling, you likely had another pretty good week. And by pretty good, it can range from so-so to excellent. There were many projects that doubled, a few even tripled within the top 100. And we're going to check out some of those projects here. Of course, Bitcoin actually just took a very mild dip in the last hour, and it's sitting at about 46.7K right now. Ethereum sitting at about 1767 at the time of this recording. Over the last week or so, we had Bitcoin jump up another 24%, pretty significant. A lot of this was fueled by the Elon Musk news, with them investing 1.5 billion publicly into Bitcoin, and the speculation and consideration by the company to actually start accepting crypto, which is huge, and kind of backs Musk's announcement from last week that he was first entering crypto. This shows that he's essentially putting his money where his company is, and furthering his feet into cryptocurrency, which has made the outlook for cryptocurrency more bullish for pretty much everyone universally. So that's had an impact. There's been a lot of fundamentals to back this type of rise for many, many different projects. A few notables that we can look at here. We had Cardano as the leading emerging trend on our platform. Over the last 24 hours at least, it's been pretty dominating and is up 80% now, most of which has just happened over the last few days. We had Binance Coin about 3-4 days ago. It really had a big run, pushed over $100 for the first time. It got up to, I think, about 150 before retracing to about where it is now at 130. We have Cosmos/Atom, AVAX. The Graph is making a big run right now. It's actually our biggest, of the top 100, biggest percentage return project of any asset we track here. IOTA, Terra Luna, BitTorrent, Cake, Matic, and Best. These are all projects, those last 8 or so that I mentioned, that have at least doubled in price just over the past week. And that is not typical, folks. So clearly we're in a very good cryptocurrency groove here. It doesn't mean it's going to continue. And we're going to try to figure out exactly how viable this run is and how much it can really, the party can continue to happen at this rate. But for now, people are quite euphoric, especially in the altcoin category, and for good reason. That can lead to a bit of a yellow flag, of course, as you may have learned from our previous calls. You don't want the crowd to believe that cryptocurrency overall is just going to the moon, even if it eventually is, because that generally leads to top addresses and holders deciding it's time to take profit and cool people's euphoria off a little bit. For now, like I said, we have had pretty unbelievable runs here and percentage gains across the board.
Yeah, and we had some coins that you haven't heard from, I think, at least I haven't since like early 2019, starting to pump. Like anyone in chat, let me know the next time you thought about Tron, the last time you thought about Tron or EOS or even BitTorrent, right? The last time I've heard those names, I feel like that meme, that's not a name that I've heard in a long time, but I really haven't heard about or paid attention to Tron or any Tron related assets for a while. EOS, kind of just got swallowed by Ethereum in terms of use cases and adoption and community. All of those coins, including Nano, Neo, everything that was hype in 2019, like February to June 2019, is now pumping once again. So I was concerned when I saw Doge pumping and a few other meme coins starting to moon. Now I'm concerned because it seems like everything can pump. And in general, it's always difficult to be super bullish when you see the ease with which coins that they haven't really changed in terms of their use cases, in terms of their on-chain activity, in terms of the value that they are producing on a daily basis. But now they're doing 2 or 3x in a week. So it's crazy, man. Enjoy it while it lasts. But I guess we'll look at some potentially concerning signals in the charts, right, Brian?
Yeah, absolutely. And this is probably the most euphoric I've seen in terms of the altcoin markets since that late 2017 boom, especially if you sort of zoom out over just the last month when this madness kind of started up. There really hasn't been a comparison that I can remember at this level for altcoins since that initial run in late 2017, where everyone began to really discover crypto and it reached the masses for the first time. So if we look at sentiment along those lines, we can check out exactly how people's perceptions of Bitcoin are looking in terms of the commentary on Twitter and the ratio between positive and negative, posts about BTC/Bitcoin over time. What this chart shows, for most of you, you probably are already familiar, but this measures the overall amount of volume of commentary for Bitcoin/BTC multiplied by the unique social volume. So the balance is the positive versus negative ratio, which you can see up here in green, versus the red down here. And then overall volume is just the overall amounts of mentions, right? So it multiplies the two and gives us a metric where the higher it is above zero, the more euphoric and danger zone level kind of look we're in right now. And if you're under, that's a sign that there's a lot of fear. So right now, you can see that since about January 23rd, give or take about a little under 3 weeks ago, we've been climbing up into higher and higher positive territory. We're getting close to 1.0. And what this number actually means is the standard deviation versus the norm. So every single asset on this chart has its own version of the normal rate of positive versus negative multiplied by the amount of mentions. And right now, Bitcoin is starting to get mentioned a lot more, and the commentary is becoming a lot more positive, as we can clearly see here. So this is generally a bit of a concern. It's not a bullish indicator. It's actually bearish, because once you get up to these levels here, you can see we got up to close to 2. We actually did get over 2.0, excuse me. And then shortly after, we had a local top, and things dropped all the way back down to, I believe, around 28, 29K before bouncing back up. And that was after people started getting fearful, thinking that was the top, right? So this is kind of a leading indicator, if anything, where you see us get really high and euphoric and everyone thinking they're finally going to get their own Lambos, and then things taper off or they drop down for a while until people get bored or flat out fearful. And right now we're kind of in the beginning stages of euphoria. And by beginning, it could very well be right in the thick of things, where any sort of drop right here will make the sentiment plummet as people who are buying in now, while you're seeing projects like Dino said, like Tron, that are just exploding. They can get hurt pretty badly if altcoins start to retrace, and that will hurt the sentiment of crypto beyond just Bitcoin here. So you got to look out for that, especially when we're creeping up like this. That being said, we're not quite at super danger levels, like above 1.5. And that's when it's a very strong likelihood of tops happening. So we are in a semi-danger zone now in terms of people's level of confidence in Bitcoin. And that's something to keep in mind.
And Brian, if you want to share or Gary, maybe you can share a link to the insight, and Brian, maybe you can share it on the screen, or I can take over for a minute. Last week, every week we publish a weekly pro report for all of our pro subscribers. And last week we've published an analysis that we've done on 2 of our social metrics. This was social trends, which maybe we'll touch upon in a minute or two. And the other metric that we tried to backtest was social sentiment. So exactly what Brian was showing at the moment. So the idea that we wanted to test was a lot of times what we see with social sentiment, like Brian said, is that when there are these massive spikes in bullish sentiment, they often seem to coincide with like price consolidations and sometimes price corrections as well. So we wanted to test this on a more data-driven basis. And what we've done is we've looked at about 3.5K different events where a specific coin on our database, we track about 2,000 different coins, and we track social volume and social sentiment for all of them. So what we wanted to test is what happens with those coins in the 2 weeks before and the 2 weeks after they hit that peak bullish sentiment, right? So when they hit that, height of FOMO, everybody is in, everybody thinks that the coin is going to keep rallying to whatever the next support or resistance level is, right? So Brian, if you want to scroll down a little bit more, even just so we can see the results of the analysis. Essentially, what we found was that when the coins hit, yeah, there you go. Maybe there
This
we go.
one here?
Yeah,
Okay.
that one. So what you see here is that when, oh, this is for bottoms. Sorry, this is a big bear sentiment. So go up a bit. Yeah, there we go. Below.
Right here?
Right there. So these are the results, right? So this is the average price performance of all of the coins that we backtested in the 20 days before and the 20 days after they hit peak bullish sentiment. Now, obviously, this analysis has some hindsight bias because we are looking at what we now know have been peak bullish sentiment markers, right? So we're still trying to figure out the best way to actually make useful models, trading models based on this, where you can actually predict in the future or for current time whether we are close to that peak bullishness or not. But overall, this seems to be the trend, not just for Bitcoin, but over all of the coins that we track, is that in the 20 days before, we see a slight and then very strong rise in the coin's price, which makes perfect sense because usually people become very bullish on an asset alongside its price rise. And then in the next 20 days, you can see very clearly that the average price of these observed coins drops by an average of 6%. So, this is obviously an average. So for some coins, it's going to drop even further, for some coins lower. But the average or the general trend seems to be that by the time we are at that peak bullish, atmosphere, it's usually a sign that crowd is getting too rowdy. Everybody is basically in. Everybody is aware that the rally is happening, and whoever wanted to buy and get into the market is already in. So there's not a lot of buy side pressure at that point, and a lot of whales are feeling more and more concerned at that point because the market is getting super overvalued. So this is sort of the behavioral analysis of why this seems to work. So anybody that's interested in reading the full analysis, we've also done some backtests on what happens when coins hit peak bearish sentiment. So when they're super low in terms of their average mood, whether that coincides with potential price recoveries for these coins. And there's a lot of other interesting data points in this analysis. If you guys want to check it out, I think Gary is going to link it in the chat for anyone interested. So yeah, just wanted to let people know, Brian, that we did actually do some proper backtesting of this phenomenon. It's not just something that we've noticed a few times.
Yeah, I really love these charts, especially the bullish one. I mean, we did an initial backtest that you mentioned at the top of this article, but this latest one reveals that even when many projects are averaged out together, when they hit that top level in the emerging trends, they have that initial drop down, which we'll often see in the raw prices when something pumps, like many have in the last week. And then it actually has that lower high, does it again to a lower low, lower high, and then eventually drops off. And it's just like what a lot of technical traders look for when there's a lot of volatility and you see that a project is really hyped, but you actually can sort of, many of you who have traded actively on like an intraday basis may have noticed that you can, if on that initial dip after it drops down, you can actually kind of ride the wave a little bit. And there almost always is some sort of second wave like this that occurs. But long term, if you're hodling a coin and you want to get in on something like Cardano that's recently been pumping, you're eventually going to get hurt a little bit when the crowd is as aware as it is right now. So it's something to keep in mind when you do your trading. Really pay attention to when an asset has official crowd discovery, which can be validated just by going to our Santrends page, which you can do so right here at the top with the Santiment logo right over here. You'll open it up and we can see live right now that the graph is number one because of its huge pump that's currently going still. Nano, Wi-Fi. Cardano is still number 4, and then you got Bitcoin in the middle. Bitcoin's more of a steady presence, so keep that in mind, that even when it's not pumping and it's actually had a slight decline like right now, you'll often see the talk about it increasing as people wonder whether it's about to drop, about to rise, or there could just be some fundamental news related to it. But like these top 4, you can really get a good idea of the fact that the crowd is much more aware of them than normal. And especially when their charts look like this, it's a sign that it might be time to at least take a little profit and see if things can cool down a little bit. All right, so I'm now going to show what Bitcoin looks like as well as Ethereum on a funding rate scale. I'm going to take off XRP and Litecoin for now. Those are part of my templates that I normally look at. But Bitcoin here, as you can see, I highlighted it. The tan line there at the bottom, this is showing that we're actually at about the second highest level since early January. What this means is that the longs are essentially at a higher ratio than normal, and they're actually paying shorts with a current percentage of 0.13%, which is high. That's indicating that there's quite a little bit of euphoria, just as we talked about. I actually closed out that window already, but as we just talked about in the graphs.santiment.net/social URL, where we essentially are seeing that people believe in Bitcoin perhaps a bit too much. And typically, when you see Bitcoin, Ethereum, or any asset at such a high spike, it's an indication that a local top may be coming up soon. You can see this spike here back on January 6th led to an eventual big top on January 9th, when there was this big spike here on February 8th. That same day, there was a big local top, which was a sign that it was time to take profit. And now we're again at a bit more of a modest 0.13%. And we had a small dip thus far right after that long occurred. So long story short, when you're seeing these high spikes like we're seeing right now, it's a sign that longs are overwhelmingly higher than shorts. And generally speaking, these shorts back here in September, early to mid September, as well as early October, these are the kind of spikes you want to see on the negative side that can really fuel the price of an asset upwards. Because of the fact that they can be liquidated, and those liquidations just rocket up the price of an asset. But right now, we're not really seeing a lot of that. The last time we saw anything in the negative was late January here on the 22nd and the 27th. And in both instances, you can see that the bottoms occurred right when they happened. This one actually is just a bit right before it, right here. And then this one on the 27th happened right at the bottom, when the price was at 30.4 and people were starting to panic that we were going to go back to 20K or below. And it did the opposite, just as we often see in crypto, right? We got to here and then boom, just rocket launch up to, almost 50K where we are now. Whether we do get to 50K, that's anyone's guess. We'll definitely be going over several other metrics here. On the Ethereum side, I also want to point out that we're still very high. Let me see if I can change the price to Ethereum to show the correlation there. You can just go to that left column here, type in Ethereum, and then click on price, add it to the chart, and there you go here in red. This is Ethereum. I'm going to click off Bitcoin to make it a little more clear and check out just how much the, oh, actually that's going to make it too wide. I won't do that. How high the Ethereum spikes have gone. We actually got up to 0.6%, so much higher than Bitcoin ever gets in terms of longs versus shorts. Ethereum has historically been very, very, very skewed toward longs versus shorts, probably more than any other main asset that I've seen on BitMEX. And this can be a bit of a long-term concern, but it's regularly in that range. So it's been able to rise with the assistance of Bitcoin rising, of course, but we want to still avoid spikes like this one on February 8th that happened right before the all-time high, right? Right after that happened, we had our all-time high and then dropped back down to, I think we actually got below 1700 here. It's just not showing because it's more zoomed out, but we're basically back up at 0.15%, which is a bit of a concern, just like we've had multiple times with these larger spikes. If it stays below like I guess it's actually at 0.26%. If it stays below 0.3, that's at least a decent ratio that can see Ethereum continue to hover around these levels. But watch for spikes up here. You don't want to see those. If you do see them, that's a sign that people are getting a little too greedy and a bit too euphoric with Ethereum. So just something to keep in mind. Both Bitcoin and Ethereum right now are being heavily, heavily longed compared to the norm.
Yeah, so both basically the two metrics or two sets of metrics that we have covered so far, social data and derivatives data, all are leaning bullish, quite bullish, in fact. And in general, our premise is that when these two, obviously, if all other fundamentals agree, but when these two types of metrics lean heavily in a certain way, it usually has an inverse correlation with the price. Now, this doesn't mean like a massive 40% drop off for any asset, but it could mean a short-term normalization of these metrics, which can only come through a correction, right? By the way, I just got Max just told me that his streaming software crashed. So guys, so far everything seems to be working, but in the case that we go offline, we'll be back immediately with another stream. So we'll let you know when the stream actually ends, just so you know. If we suddenly cut off, it's not because we don't like you or we decided to end the stream. It's just because the streaming software is giving us issues. But so far, it seems like everything's working as planned. Sorry, go ahead, Brian.
Cool. So moving on to mean dollar invested age, which is a great metric to check out on at least a weekly basis, if not a few times a week. It's a good long-term indicator. Right now, Bitcoin's mean dollar invested age, which measures the average age in which the dollars were invested in Bitcoin, it essentially is continuing to decline, and that's a great sign. This is basically an inverse correlative metric to the prices in most cases, and you want to see the age of dollars getting younger and younger on average, as it's essentially showing that dormant coins are moving, those long sitting tokens slash dollars that have been sitting in an address being moved generally is a great sign that the overall markets are starting to churn in a more real-time basis instead of just having a lot of hodlers not actually making transactions, right? You don't want to see that because that creates stagnancy. So it essentially means that the price is able to move up with the assistance of tokens and dollars circulating around, because usage is arguably the most important thing in crypto. Being able to actually transact, move from wallet to wallet, that's what helps churn prices upwards. And that's what we're seeing for both Bitcoin and Ethereum here. Both are continuing to move down. Really not much else to be said because this trend has been happening for quite a while. As you can see here in mid-January, right around like I'd say the 15th to pretty much the end of January, that's when this brown curve here was flattening out. And that's when the price dropped, right? That's when the dormant coins stopped being moved. But as soon as it started moving again, prices rocket launched up and we're at almost 50K because of it. So if this continues to move down, I'm pretty confident we are going to pass 50K. But if it starts to flatten out as people get greedy and the dormant tokens decide it's time to just hodl from here, that's when we might end up falling just short and we start seeing a lot of, ranging here or even a drop. So keep this metric in mind, mean dollar invested age. You can find it just by typing it in the search bar, and it's a great thing to keep track of. All right, I also want to touch on Ethereum's average and median fees. In short, they are still quite high. As of now, the average fee for an Ethereum transaction is still sitting at about $15.48. That is historically quite high, despite it dropping off from just a few days ago when it was at a whopping $24.20. We talked about it last week. We were at an all-time high of $25.23 per transaction for Ethereum, which is just enormous and can create a lot of stagnancy because people don't want to make those transactions that lead to, the drops here in mean dollar invested age. And if they don't want to make those, that's when we start to get a lot of hodlers who don't really transact their tokens and can create ranging and drops in prices. So we have seen a bit of a drop, but it needs to be a lot more for us to feel really safe and confident in Ethereum for the midterm, I would say.
Yeah, so there's a few things that I want to touch upon here. So last week I talked about how these high fees, the last time we saw them, and Brian, you can kind of zoom out to summer of 2020, and you can overlay the amount of active addresses that are sending or receiving Ethereum on a daily basis, just so we can kind of see what those trend lines looked like and what the correlation between the two metrics look like. So back in summer of 2020, we saw a very sort of clear decline in the amount of on-chain activity on Ethereum coinciding with rising fees, which makes sense. It pointed to like a short-term, basically professionalization of the network. People with small or low ROI activities kind of just waited for the fees to drop, because most of these spikes in fees were actually connected to launches of specific coins rather than anything that was systemic, right? This time around, the fees and the fee hikes aren't really connected to any specific token launch, any DeFi project going live or whatever. It's mostly just people interacting with the smart contracts and complex smart contracts more often than usual. However, we are at the moment at least not seeing a similar decline either in daily active addresses, or basically the amount of unique addresses that are interacting with Ethereum on a daily basis, nor with the total amount of value that is being transacted on the Ethereum network. So for example, if you look at transaction volume for Ethereum, there's still a relatively high it's still going at a relatively high clip. So for the time being, at least, no transaction volume as well, Brian.
The on-chain, got it.
Yeah, the on-chain. Basically, the amount of Ethereum tokens that are being transacted on-chain on a daily basis. So I would be concerned, or more concerned, if we saw these two metrics, which can kind of be used as a proxy for network activity in general, I would be concerned if they were leaning more towards a sort of downtrend, right? Both transaction volume and daily active addresses are still fairly high considering the price action for Ethereum, and they haven't dipped alongside the rising fees. What that tells to me is that even though fees are ridiculous, a lot of people are still happy to pay a premium for interacting with the Ethereum network, and I think that's also one of the signs that we are in very well in a middle of a bull cycle. That a lot of people just don't mind cashing out and spending money that maybe 6-7 months ago was unthought of to spend on fees. I saw a guy yesterday on Twitter. He shared a screenshot where it was said that he spent about $800,000 on Ethereum fees or something like that to date, right? And then there's a bunch of other people that were kind of piling on to the thread, with their own sort of balance sheets of how much they spent on fees, and it was thousands. So it seems like, at least for now, there isn't really a whole lot of concern in terms of, at least from what we're seeing on chain, there isn't a concern among Ethereum users about the rising fees. If we see that concern, if we see that sort of divergence between the price continuing to rise and the amount of activity in the network starting to decline, that might be a cause for a concern. But another sort of side effect, I think, that we haven't really thought about is how this will affect other blockchains. So Gary published a very cool insight. I don't know if it was yesterday or a day before, where he looked at Binance Smart Chain and the performance of Binance Smart Chain in the past couple of days and a couple of weeks, as well as the performance of coins that are building on the Binance chain. So one of the things that we noticed is that the Binance chain daily transactions count actually overtook Ethereum's for the first time ever, right? This is a pretty, I don't want to say monumental, but it's definitely a very interesting trend that kind of went out under the radar for a lot of people, is that as the fees on Ethereum started to rise, I think a lot of people were looking for alternatives, and that kind of gave room for coins that were building on alternative smart chain platforms, smart contract platforms, to also kind of begin to rally. So that's why you see a lot of coins building on BSC, Binance Smart Chain, including Cake, which is PancakeSwap, XVS, TWT, Burger. All of these coins in the last week alone have done between like 2 to 4x in their price action. So it's interesting, and I do believe, at least I personally believe, that these two things are connected, interconnected. The rising fees on the Ethereum network kind of having a trickle-down effect on other smart contract platforms, and contributing to adoption on these other blockchains as well, which also contributes to their price action. So this is something that we haven't really thought about. Last week when we talked about rising fees, is that I said, well, because of the rising fees, I thought that coins like Loopring and Matic, layer 2 solutions, right, might see an uptick, but we actually didn't think about how this might affect other blockchains overall. And it seems like it's done CZ a favor over the last week or so. So yeah, just something that I wanted to touch on there, Brian.
Yeah, thanks, Dino. I definitely recommend you guys check out insights.santiment.net and read this article in completion. It's a great one that really explains a lot about what's happening with the at least current transfer of interest from Ethereum to Binance Chain because of things like these high fees. All right. One of our more popular metrics here, I want to give a brief look at. This gold line here is the amount of 1,000 plus Bitcoin addresses. Right now, we have actually seen our biggest drop in these whale addresses from going from 2489 to 2442. So that's a difference of 47 addresses on the negative side over the last 3 days here. This is the biggest drop we've actually seen in whales since December 18th to looks like the 25th, right up until Christmas there. So long story short, the prices of many assets often follow what the whales are doing. That's where the money is going. And right now, whales have finally decided it's time to take profit beginning on February 7th. And there are roughly, I'd say 2% less addresses in this elite status of 1,000 plus Bitcoin compared to just a few days ago. So it's something to keep in mind. You'll of course continue to see these very tiny addresses in tan here always climb pretty consistently. The tier above that, the 0.1 to 10 Bitcoin addresses, which many of you fall into, that line is continuing to climb. And look at the red line. Interestingly, they've been the ones that have just taken profit. The 10 to 1,000 Bitcoin addresses, they were just taking profit over the last 2.5 months, and they're pretty much still sitting at a very low level. They did have a slight dip by, but it's nothing outside of the norm here or here. Even they aren't really showing much belief that Bitcoin can rise above 50K right now. But the big telltale sign is going to follow in this gold line here with the 1,000 plus addresses. And right now it's on kind of a 3-day dip. So it's something to keep in mind with your trading. If the whales are starting to slightly lower in numbers, it's a yellow flag to say the least that there might be a bit of a correction in order. But you may be able to just check back tomorrow with your Sandbase Pro account and see that it's starting to jump back up again.
Yeah, so Brian, if you also want to show the last two groups of holders, right? That's 10,000, 10K to 100K, and then 100K to a million. It's yeah,
10K
something
to
that
100K.
yeah, just 10K to 100K first, I think. Oh, but if you can show the combined balance, I mean, sorry.
Got it.
Yeah,
Holders
so
distribution combined
what
balance.
Brian was just showing was only the amount of addresses that hold a certain amount of Bitcoin, right? Another metric that we like to look at is the total amount of Bitcoin that is held by a specific group of holders, right? So this is actually, first, if you can show the 1K to 10K now so that people can see exactly how much. So this is the group of holders that we have looked very closely for basically since the start of the rally. Brian, if you can overlay the price of Bitcoin over that as well, so people can see that they have kind of been accumulating ever since the rally started, right around early October like 5th or something. That was the start of their accumulation. And then we saw a slight sort of dip or a plateau of the total amount of Bitcoin held by these addresses right around the previous all-time high on January 8th. You kind of see that a few days before that, they started dipping a little bit, so their total balance started to dip a little bit, and then it started to kind of flatten out, pointing to the fact that there wasn't really, at that point in time, the accumulation has stopped, at least in the short term, coinciding with the, increased price volatility and short-term price corrections. And then they continued to, they bought the dip, continued to accumulate for most of February and late January until the last couple of days, basically until we saw Bitcoin break all-time high once again. In the past few days, this is really the first significant dip that we have seen in the total holdings of these sort of mega whales for BTC. Right now, this is, I think, this particular group of holders is likely populated by a lot of just smart investors, big money, but individual addresses. They don't necessarily belong to exchanges. However, if you look at the next two groups of addresses, they are probably, especially the last one, they are probably exchange related. So this is the 10K to 100K, which is brown. And then the last group is 100K to 1 million. There's only three addresses that hold between 100,000 and 1 million Bitcoin, and they belong to Bitfinex, Huobi, and I forget the last one. I think it's Binance. So there was until basically 2 days ago, there was only two addresses holding that amount of money, and now there's three of them. So there has been a significant, it seems, influx of funds into exchange wallets. Or the other potential explanation is that there has been a reshuffling among internal exchange wallets, where, for example, let's say Binance has 8 different wallets, right? Hot wallets, and then it just transfers a lot of Bitcoin into their cold storage. So the amount of Bitcoin in that cold storage wallet increases above this threshold, right? However, if you merge those two groups, so if we assume that this is just internal reshuffling, then the two groups, or the difference between the two groups in terms of held Bitcoin, should flatten out when we merge those two groups. But if you merge 10K to 100K and 100K to a million, you'll still see that there's a significant increase in the last few days. So this points to the fact that overall, the amount of Bitcoin being held in these large exchange wallets is actually on the rise. And so now if you look at exchange inflow for Bitcoin, which is the total amount of BTC that is being moved to known exchange wallets, you'll also notice a relatively significant spike, especially if you zoom into like the last month. That's why I say relatively. Um, there we go. And then plot the price over that as well, Brian, please, so that people can see where it happened. Right. So you can see that there was a pretty significant spike in the total amount of Bitcoin being moved to exchanges today, or actually late yesterday, right around the new all-time high for BTC, suggesting a rise in sell-side pressure, suggesting another wave of possibly even whale sell-offs, which seems to have kind of acted as a barrier or resistance to a push above 50K for now. Something to keep in mind, I personally very much enjoy looking at the 1K to 10K BTC holder group. So the fact that they are now, for the first time, really since the start of the rally, they are dipping in their bags, and they're maybe starting to claim profits. Obviously, we can't say for sure just from these metrics. Is at least a little bit concerning, right? So something to think about as far as the sustainability of the rally.
Yeah, thank you, Dino. So we're getting short on time. Really quickly, I will fly through Ethereum and show you that it is actually in a much better situation, and the whales, which are deemed 10,000 and above, as opposed to 1,000 above, due to Ethereum's price being lower than Bitcoin, the whale numbers are looking healthy, if not a bit stagnant, right at about the high to mid to high 1,200 numbers. Until we see that drop, it's generally a good sign for Ethereum, but just keep this in mind along with the other more concerning metrics like high fees and things like that. Yeah, that's the fees again. And I also want to touch on holders distribution for all of the top 40 or so assets that we have access to for this type of data. Whale metrics here are measured by purple, which is, it's doing a refresh. Sorry, guys. Give it just a moment. Purple is essentially the 90-day holders change percent-wise. So the higher it is, the more of a degree of a rise there is for that amount of whales for the respective asset we're looking at. Blue is 1 week change, and yellow is 1 day change. I have it sorted right now by the weekly change, and it looks like just since the last refresh, there is a flip-flop and along these two. It looks like Wi-Fi, our own sand token, which is interesting, is seeing a pretty big jump in top holders change. 0x, Sushi, Band, Basic Attention Token, UMA, Synthetics, The Graph, and a few others. These all, not so coincidentally, were projects that had extremely good weeks, even compared to the average altcoin rises. Generally speaking, this weekly percent change is where the money is going with those whales. And when you see them rising by 10% plus, like we saw with Wi-Fi here, which is now sitting at 48.2K, a pretty significant rise compared to where it was last week. I think it was in the 30Ks last week. This is a pretty clear sign that the amount of whales are rising at a significant enough rate where there's eventually going to be a rise in price. So keep that in mind when you're using your Sandbase Pro subscription. You can plug in your API, go to add-ons, enter your API key there in Sandsheets, and you'll be able to explore everything that I'm showing right now on these models. Also, really quick, MVRV. So those of you who might be familiar with this metric, it is showing the average amount of returns, as it's also doing a refresh right now. But before it did the refresh, you could clearly see that we are in very red zones across the board. That essentially means that the average trader returns for all of these projects are very, very positive compared to where they normally are, where MVRV normally will fluctuate right around 0% for different time ranges, meaning there's an even amount of not even amount of traders, but overall, when you average all of the trader returns together, they will be right around 0%. And right now, all of these bars here down below show that the divergence between the norm and where it is now indicates that average traders are profiting immensely. So that's something to keep in mind. Even with this altcoin run, kind of faking out a lot of people who were heavily in Bitcoin just a month ago, there's still average trader returns that are through the roof on the positive side right now. So it's something to keep in mind that if you're buying into a project right now, you're doing so when many, many people that you're competing with and trading with are already well into the profit, and that means it's of a heavier risk than it normally would be.
Yeah, so one thing that I should mention here is that there was a comment, I think, by Sergey Chan when we were talking about funding rates, when he says that funding rates work differently in bull markets, that they can be high and that's still okay. I think that's fair. it's still like if we even go back to 2019 and you look at Bitcoin's funding rates, the moment that they became extremely high, the price rally became unsustainable. So I think that there's a level at which extremely high funding rates really do tend to impact the price in a negative way. However, when it comes to metrics like MVRV, it's no surprise that a lot of people are currently in profit. So according to this metric, which is an on-chain indicator that tracks the average profit of the total amount of addresses that have acquired coins in a particular amount of time, right? By this metric, of course, a lot of coins are going to be overvalued because there's a lot of profits that haven't been claimed yet, which is what this metric is saying. So if the market becomes, kind of wary, and if there's a shift to a bearish sentiment, that a lot of people can start dipping into their profit bags, exerting a lot of sell side pressure, and that can impact the price in a negative way. However, especially in bull markets, I have seen quite often that these high MVRV levels that I consider generally very problematic don't seem to impact the price negatively in the mid and long term. Like there might be a small correction and then the next day you'll see a new all-time high. So you should definitely keep in mind that some of these metrics that usually I would consider to be very bearish, like major spikes in exchange inflow, very inflated MVRV levels, these metrics sometimes act differently during bull markets, or they seem to have a less effect on the price when everything seems to be pumping. So just keep in mind that when we're talking about, oh, these are super overvalued. Yes, they are, some of them, but it doesn't necessarily mean that, the profits can get even higher before we end up seeing inevitably a correction.
Right. Yeah, and that's why this model in particular is best used as a long-term model as opposed to a short-term one, because we have seen mostly orange and red for going on about 2 months now across the board here. And it can stay that way for a while. Like Dino said, they can be, markets can stay irrational during bull markets. And it means that you may see the average returns just stay at these sky high rates until things cool off. But when they finally do cool off, it's likely going to be a big cool off, not just a small one, when you have such a sustained time level where you're, below this dashed red line here, indicating a danger zone across the board. So that being said, we're about 10 until the hour, and I want to make sure we have enough time for questions in here. So maybe we can open it up. Dino, if you want to switch and take over the screen share, you're more than welcome, or I can continue to do it on mine.
All right, hopefully this works. Let me know if everyone can see my screen. Hopefully you guys can. I'm just worried because we are having some issues with Streamlabs, our streaming software.
I can see it.
Okay. All right.
Is mine off?
I think
is it showing both of ours? Okay, perfect.
Okay, Max has given us his thumbs up. All right, so I've seen a lot of comments about Cardano, so we'll check out Cardano. We can check out XRP and a few maybe more coins if people want to stay around and stick around and talk. Before though, IFI. I want to give 5 minutes to this coin, especially because maybe 36 hours ago we published this article about IFI. So it's currently about plus 12%. The price of IFI has risen about 12% since the publication. When we published it, IFI was around, what was it? 39K. So it broke all-time high. I think it went above as high as maybe 49K today. Actually, even higher. It broke 50K. Okay, cool. So in this article, we covered a number of reasons why we think IFI might continue to pump above all-time high. So I just wanted to kind of, Gary, if you can also share this article in chat so people can read it. It's available, I think, to everyone, not just pro users. So one of the things, the first thing that we just noticed is just some basic TA and price analysis, higher lows and higher highs, and this support resistance flip, suggesting that there's a fairly bullish structure in place in terms of just the general price information or price data. coming out for IFI. But in terms of fundamentals, we have also seen a number of hopeful signals for IFI, right? So one of the things that we notice here is that there's been a heavy growth in the development activity of IFI. So Andre Cronje has definitely, been busy coding away since the start of the year. This is the biggest spike since early October in terms of the development activity in IFI's public repository, GitHub repository, suggesting that new features might be rolling out. In general, the project is still very deep into polishing their product and staying true to the roadmap. So that's in general, while it's not necessarily a signal of what might happen in the short term with the price, it usually is a good sign overall that the project that you're interested in is pushing code and it's not just an exit scam and is continuing to work on its product. At the same time, we have seen these very low levels of interest in terms of social volume. So the total amount of IFI related mentions on crypto social media throughout the rally, suggesting that even though IFI has been pumping for a few days when we wrote this insight, the crowd seems to have been busy with other coins. There's a lot of meme coins to pump, so there was just not enough time for the crowd to take notice of IFI's pump. It did take notice of it today, but at the time of writing, we were like, okay, there's definitely high growth in dev activity. There's not a lot of interest in the coin still, and then we have also seen an interesting trend in terms of IFI's exchange-based activity. So this metric that I'm showing right now shows IFI's supply on exchanges. So the total amount of IFI that has been on exchanges located on known exchange wallets in the past 6 months. So one of the things that we've noticed is that the highest point of IFI supply on exchanges has coincided with the bottom for IFI, all-time bottom for IFI, obviously, if you don't count the early sort of price discovery, right? So this suggested that holders were capitulating. There was a weekend exodus. Most people that wanted to sell did so here, and since then, as the price started to rise, we have seen a consistent decline in the amount of IFI found on exchanges. We have seen like a few spikes coinciding with the upticks in price and then coinciding with short-term corrections as well. But overall, the trend has been decidedly down. So the less amount of IFI there is on exchanges, the theory at least is the less sell-side pressure there is, and in general, that can kind of provide fundamental support for the price of that coin to rise. So this is another thing that we've seen with IFI. And then finally, as Brian said, like even with IFI, when we wrote this article 2 days ago, this is the MVRV, the 30-day MVRV, or the average profit of all addresses that have acquired IFI in the past 30 days. So you can still see that, even then, IFI's MVRV was fairly high. It was definitely in the positive zone. Therefore, by default, according to MVRV, we are sort of overvalued, right? However, we have seen their profit margins, the profit margins of short-term IFI holders, grow much higher in the past than they are at the moment, allowing for enough room for the MVRV to get even higher, for the price to rise before we need to worry about a short-term correction based on on-chain indicators. So because of all of that, we kind of concluded that price, the sky's the limit, and that the lack of attention that IFI has been getting lately means that there's enough room for the price to grow further. So since then, IFI has obviously broken its all-time high. However, what we have seen now, compared to 2 days ago when we wrote this article, is a lot more attention towards IFI. So like Brian mentioned, this Santrends is a list of top 10 words that are gaining the most social volume on crypto social media at the moment. This list gets updated every hour. So at the moment, IFI, according to our data, is the third most talked about coin in the crypto community. Other than GRT and Nano. So while 2 days ago, IFI was kind of, flying under the radar, at the moment, it's becoming very much a popular coin once again. So it's something to keep in mind. And it's no surprise that, for example, if we zoom in a bit, you will see this is a spike in social volume, kind of right at the top before we saw a short-term correction. So something, once again, showing that the mood of the crowd and the general awareness that the crowd gives to a particular coin can certainly seem to have an impact on its price. All right, with that in mind, I'm gonna stop our prepared stuff here and let's jump into some questions. So I saw ADA, I saw XRP. Brian, anything else that you saw in terms of coins that people want us to look into?
Yeah, Link, there's a few mentions. Uni, that should be plenty if you want to do those four or just a few of, two of those four that you think are useful.
So we get a lot of questions about Cardano these days. And the thing is, guys, at least for now, we still don't have on-chain coverage for Cardano, sadly. So we can look into a bunch of metrics like whales, holders and long-term holders, MVRV, a lot of different coins, a lot of different metrics we can't really pay attention to at the moment because we still haven't integrated on-chain metrics for Cardano. What we do have, and I'll just focus my analysis on this, is what we do have for all of the coins. So this is social activity data and development activity data. So let's start with the development activity. This is obviously a big dip in Cardano's development activity during the Christmas and New Year break. Since then, the development activity of Cardano has kind of pushed into its normal territory. And by the way, I wrote about this in our end of the year report. Cardano was, I believe, the second highest coin or project in terms of development activity. Overall, across all the coins that we track, across all the GitHub repositories, and we track over, 5,000 different GitHub repos, something like that, I'm not sure. Across all of the coins that we have in our database, Cardano's development activity has been the highest. Now, obviously, our development activity information is not perfect. There are some private GitHub repos. We're not tracking all repos dedicated to cryptocurrencies, but in general, it's undeniable that people are still very much working on this project, polishing their features and pushing new code. Now, as far as actual utility of ADA at the moment, up for debate. I would assume that most of the rally that we're seeing at the moment is tied to Binance allowing staking for ADA. So, it's not necessarily anything that's been happening with the utility of the project in itself. But so far, at least, it's comforting to see that ADA's development activity has once again kind of moved back to its normal levels, right? Now, as far as social data is concerned, yeah, this is a bit more concerning. This is the amount of mentions of ADA over time. So I'll just show you what happened across all time for Cardano and its social mentions, just so you can kind of put this into perspective. So this was the amount of ADA mentions or Cardano related mentions the last time we saw its all-time high. And you can kind of see that it was the highest amount of social mentions ever at the moment before, and it coincided with a major correction. Obviously, this wasn't really anything ADA specific. I think the entire market was kind of just going crazy. But yeah, there was quite a bit of hype around ADA here as well, around the all-time high. And then we had another spike, if I zoom in a bit. We had another sort of rally here around this period of price recovery for ADA. And then I think a lot of these spikes have also been connected to like Shelly update and the roadmap progress rather than just price activity. But if I zoom in to the last, let's say, since May, right? Okay, so this is the price of ADA. So this now looks small, but if I zoom in, yeah, you can kind of see at the time how the price of ADA has kind of, as it has as it has grown, the amount of mentions of Cardano have grown as well. And then, this massive spike in ADA social volume coincided with a short-term correction. And then it wasn't until there was, the crowd's attention dissipated and there was, they moved on to other coins that we had another sort of upward momentum spike for ADA's price. At the moment, however, the amount of mentions of Cardano on crypto social media continue to rise, which, in general can be fairly concerning. The way that we track the most popular coins at the moment is with this list. ADA is currently on spot number 4. Before that ADA, there's GRT, Nano, and IFI. So like I mentioned earlier, we have done some analysis on the social trends aspect of our platform. Let me show you 1 sec. All right. So this is a weekly report we've done last week where, like I said, we have tested 2 metrics. We've tested social sentiment, and we talked about this already, but we've also backtested social trends. So we've backtested the impact of this list of 10 words and the potential impact of this list on the price action of different cryptocurrencies. So our theory was that any time that we saw a coin end up in the top 3 positions on this list, meaning that the crowd is basically, it's one of the most popular coins on the market at the moment. Our theory was that the moment that happens, it usually tends to signal a local top and a potential sign of an incoming correction. So what we've done is we've backtested all of the instances in the past 2 years when we had a coin's name or a ticker end up in the top 3 positions on this list. And then we looked at the previous 2 weeks before they ended up on this list, and then 2 weeks after they ended up on this list. What has been the price performance of those coins, right? And this is the result. This is what we've done. This is the first backtest that we've done on this phenomenon last year. So this is once a coin claims the top 3 positions on emerging trends, this was the price action before, 2 weeks before, and the price action 2 weeks later. However, we've done this only on about 200 different events. So this is why we wanted to do an updated version. This is from a week ago. So the first chart was 9 months ago, and this is from a week ago where we backtested 650 different times that a coin's name or a ticker has appeared in the top 3 positions on our social trends list. So this is its price in the 2 weeks before, and then the price of the average price performance of these coins in the 2 weeks after they find themselves on our list. In general, it seems that the average price of the coins drops by 13% over the next 2 weeks. So, like I said, things work differently in the bull market. So, take everything I say with a grain of salt. But in general, it seems like if this was a normal market, I would be fairly concerned about ADA's rise in social volume and the fact that a lot of people seem to be shilling at the moment, and that there's quite a bit of FOMO surrounding the coin. Unfortunately, like I said, we can't really look into a lot of different on-chain metrics because we haven't integrated on-chain data for Cardano. But if you would like us to, let us know on our Discord. We're always taking requests for new things to add to our platform. And you can also join our governance on Snapshot. So if you go to Snapshot and find Santiment on there, and you can submit a proposal if you have Sand staked, that we then need to consider as a company, as a project to add to our platform. So if you want us to add on-chain data for Cardano, submit a governance proposal on Snapshot, and we'll think about it. Or we'll see when people vote, what's the general sentiment of the crowd. All right, this is as far as Cardano is concerned. Brian, what was the other coins that people wanted to see? XRP and something else?
Link and Uni, I also saw.
Okay. Let's check out. I think there was a Ripple first, right? So let's start with Ripple. I want to start with just general on-chain activity for XRP. So obviously, this was the time that the group, what was it called? Pump and Hold XRP or whatever, the Telegram group with more than 200,000 members. They started buying into XRP quite a bit, so that you can see a spike in daily active addresses of Ripple or XRP. Since then, obviously, there has been a decline, but in general, if you take this as a clear outlier, the amount of activity on the network continues to rise. So, start of the month, let's say here, there was about 10K addresses interacting with XRP on a daily basis. Currently, there's about 19 to 20K, actually 21K. So it's basically doubled. The amount of on-chain activity, just in terms of active addresses, has doubled since the start of the month, which is good. You definitely want to see a consistent rise in on-chain activity alongside the price. When you see price continuing to rise, but the amount of on-chain activity in terms of daily active addresses and on-chain transaction volume starts to decline, it might suggest that people are moving away from that coin. There's less speculative interest, less buy-side pressure, which could, negatively impact its price. So for now, the amount of on-chain activity in terms of daily active addresses seems fine. Transaction volume, or the total amount of XRP that is being moved on the blockchain, also seems relatively fine. Obviously, you'll have ups and downs. There was a massive spike in on-chain transaction volume during the pump and dump, but since then, it's definitely sort of normalized in these levels, which I think are fairly high for XRP anyway. Like if we look at the last 6 months, yeah, like compared to autumn of last year, there's a clear uptick in the on-chain activity of XRP, right? Now, what I also want to see is what's going on with the amount of sell-side pressure for Ripple. So this is the total amount of XRP moving to known exchange wallets. And let me also just take a look at exchange flow balance. Okay, pretty much the same thing, especially the last week or so. So let's start with the exchange inflow. So this is the total amount of XRP moving to addresses that we have labeled as exchange wallets, right? Obviously, big spike during the pump and dump, suggesting that people were now looking to sell. There was a massive spike here, suggesting that there has been a sort of a move to, at least by maybe a few whales, to cash out on XRP. So it seems like somebody thought that once we crossed this line, what was it? Was it like 0.45? Yeah, probably somebody thought that we were that this was the top for XRP, that it wasn't going to rise higher, and so decided to, once the XRP started to fall below 0.4 once again, they were like, okay, yeah, it's not going any higher, time to dump. Since then, there's been a sort of period of price consolidation. However, in the past few weeks, maybe 2 weeks, we haven't really seen a massive rise in exchange inflow. There has been a slight uptick today. So let me zoom into the last week so you can take a clear look. Right. So now you also obviously need to put this into perspective. I just showed you that on a longer term scale, this just registers as a small blip, right? But it's worth enough to point out there is currently a slight uptick in the amount of XRP moving to known exchange wallets, which could suggest that some people are looking to take profits and sell off parts of their bags. So keep that in mind. And it seems like since this, especially this spike happened, there has been a little bit of a downtrend already. So it might be getting priced in as we speak. All right. One other thing I want to take a look at is the MVRV. So this is like I said, the MVRV is trying to calculate the average profit or loss of a particular group of holders. So MVRV, 30-day MVRV, like we're looking at now, shows the average profit of all addresses that have acquired XRP in the past 30 days. It's currently pretty high. It's about plus 36%. So on average, a holder that has acquired XRP in the past 30 days is now up plus 36% on his initial investment. So basically, short-term XRP holders are about a third up on their initial investment, which is big, right? So if we look at the last year of data for XRP, we can see that it's rare, really, unless you count these major outliers, that we see these levels of MVRV, so these profit margins. Usually it seems that we kind of peak at about plus 25%. Holders start to take profit, and therefore it kind of start to exert a little bit of sell-side pressure. The price declines. We go into the undervalued territory, allowing the price of the coin to move upward once again. So yes, we are definitely. So this is as far as short-term holders are concerned. As far as long-term holders are concerned, this is the 365-day MVRV ratio. It's pretty much the same picture. Both short and long-term holders are now in a substantial amount of profit. Long-term holders are about plus 46% up on their initial investment. So what that means, all that means, guys, is that if you just put yourself in their positions, if you're, let's say, a short-term XRP holder, you've bought XRP maybe 2 weeks ago, and you're currently up about 36%. Just think what you would do in this situation. There's nothing more to this metric than that. Like, do you think there's enough people that are looking to begin to take some of these profits at the moment? Or do you think there's enough sort of hodl pressure and people that are content with sitting on their bags for a while longer before they start selling off? One way that we can maybe figure that out is by looking at the behavior of dormant coins. So whether coins that have not moved between addresses for a long time are now starting to pick up once again in activity, which could suggest that, now long-term holders are looking, they're becoming more active, might be looking to sell. So one way that we can take a look at that is by examining age consumed. Age consumed is a metric that spikes when there's a significant amount of previously dormant coins moving on the blockchain. So for example, you can obviously see a massive spike in age consumed during a pump and dump, suggesting that a lot of holders were looking to take profit of the pump. Actually, if I zoom in, you'll notice that the biggest spike actually happened after the dump. So it seems that, some long-term holders were actually, they missed the initial pump and were then kind of sadly looking to offload their bags at this amount of profit anyway, right? So since then, the age consumed has kind of fallen down to just very low levels overall, suggesting that on average, long-term XRP holders are holding on to their bags. One other way that we can look at this is through mean coin age, which is basically just coin age consumed in reverse. So when you see rising slope in mean coin age, it means that on average, the average age of coins on the network is rising, meaning that they're staying in their wallets. They're becoming older, right? And so when you see these dips in mean coin age, that means that they're becoming younger, meaning that they're starting to move. Coins are starting on average to move on the network. Therefore, the entire age of the network is becoming younger, right? So these sort of periods of uptick, incline of mean coin age is basically a period of hodling. And then these dips in mean coin age are basically a period of redistribution and potential capitulation, like you saw here at the bottom and like you saw here at the pump and dump. So since then, basically since the start of the month, the general trend seems to be upward. So on average, long-term holders of XRP are holding on to their bag for the time being. This could be, once again, it could be a relatively concerning signal, because there seems to be quite a bit of just bullish outlook for XRP. It seems a lot of people are just content with hodling and not really scared. Fear and greed is probably high. But for now, at least, it doesn't seem like long-term holders are selling, right? So this spike in exchange inflow that we've seen today, it's probably coming from short-term holders looking to cash out. Probably somebody that has bought within the last few days, few weeks at most. So overall, I would say MVRV is looking overvalued, which is not great. There has been a spike in exchange inflow, which is not great. What's its social volume looking like? Very low. So not a lot of people paying attention to XRP at the moment. I mean, very low, relatively low. Maybe if I zoom in, we'll actually see how low it is. Yeah, a little bit of an uptick here. So yeah, there are a few signals that might point to a short-term correction, which we might already actually be seeing here, right? So exchange inflow spike, MVRV being high, social volume being on a slight uptick. However, in general, on-chain activity is still going up. So while there might be a short-term correction, as long as Ripple's on-chain activity continues to rise, I would be fairly okay with its price action in the sort of midterm, at least in my opinion, right? Obviously, nothing of this should be construed as financial advice. We're just kind of looking at a bunch of different charts that we have on our platform and trying to figure out what that says about the behavior of the network. All right. Brian, do we have time for one more? Do you want to take over? I forgot what was the last coin that people wanted us to look at.
I can take over. It's Uni, but we're also about an hour and 15 minutes in, so I'd argue that we may want to actually cut it right here.
Okay. In that case, let me just say thank you to everyone that's been here for the entirety of the show. Two things. First, check out app.santiment.net if you haven't already. There's a 2-week trial for everything that you've seen on the platform, right? So anything that you want to test yourself, all of the models that Brian has shown, all of the metrics that we have talked about, all of the insights that we have written, screeners, watch lists, alerts for coins, a lot of things that we haven't even touched upon today. It's all available on the platform for 2 weeks for free, and then from then on, it's just $49 a month. 45 if you take a yearly plan. So it's definitely affordable, especially hopefully in this bull market, to keep an eye on these, to keep tabs on the not just the price action but also the fundamentals of the coins. That's thing number one. Thing number two is keep an eye. If you like this type of content, we are going to be publishing more videos starting next week. I finally have my own relatively decent camera that I can use to publish short form videos, not just these long 90-minute long weekly streams. So if you are interested in like shorter term, maybe 10-minute bite-sized videos of what's going on with your favorite coin, click subscribe to this channel, because there will be more short form content coming out starting next week as well. Thank you all for joining us. I'm sorry that we didn't get to all of the coins. Once again, we really need to figure out a way where we talk less in terms of what we prepared, and we just let questions run, and we answer your questions along the stream. Everybody that wants to try out the platform and decides that they actually want to purchase a subscription, you can use a code TWIC, which is short for This Week in Crypto, the name of this call. Use TWIC during your checkout, and you'll get 25% off your first billing cycle on Santiment. So, if you want to try Santiment for a month, you'll get 25% off for your first month or for your first year, however you decide to cut it. So once again, thank you everyone for joining us. I hope it was interesting to you. I hope that you learned something. If it was, join our Discord. There's a link in the description of this video. That's where we're going now to continue this discussion with both our pro subscribers and just the general community. So thank you everyone, and I hope to talk to you in 7 days.
Yeah, Dino, I want to also just give the disclaimer that we always do, that what we're showing on these calls is not investment advice. What we do is show metrics and data that is historically accurate and leads to good trading decisions, but we are never intending to tell you guys what to do with your money. The decisions are yours, and our data is just there to lead you to the best possible investing decisions that you can make by learning how these metrics can be essentially used to your advantage. So keep that in mind. And of course, the best things you guys can do for us, if you appreciate our shows, are to spread the word and use your referral links in your account settings. So make sure to create a referral link, spread the word. If you have a chart that you find interesting, drop it on Twitter or Reddit or Discord or Telegram, anywhere you share useful insights with your crowds. Tell them about our calls. We'd love to continue growing here, as we have quite rapidly over the past couple months, especially. So thank you all so much, and we will talk to you in about a week.
Talk to you soon.
Bye, guys.